Good afternoon and welcome. I'm Elizabeth Slattery, Vice President of Practice Groups at the Federalist Society. Thanks for joining this conversation about the landmark Vanguard settlement that was announced yesterday. As always, our usual disclaimer applies. The Federalist Society does not take positions, and all views expressed in this session belong to our speakers. Toward the end of the webinar, we'll open it up for audience Q&A, so please start thinking about your questions. You can submit questions at the bottom of your screen through the Q&A function in Zoom. Now I'm pleased to introduce our moderator. Paul Watkins is the founding partner of Fusion Law. He has extensive experience with state, federal, and global regulators, building coalitions and implementing policies to promote innovation in financial services. He's responsible for designing and implementing the first state and federal fintech sandboxes in the United States. Paul previously served as Civil Litigation Division Chief at the Arizona Attorney General's Office, and he practiced law in the areas of securities litigation and transactional work. Paul, please take it away.
Well, thank you so much, Elizabeth. And it's a real pleasure to be here discussing this important topic with two experts, probably the two folks you would most want to hear about on this particular topic. As was mentioned, the state attorneys general reached a settlement with Vanguard regarding a lawsuit brought against Vanguard, BlackRock, and State Street, alleging that those asset managers used their significant voting share in public companies to reduce the production of coal. Vanguard is settled, so the remaining parties are BlackRock and State Street. To carry this conversation today, we have Brent Webster and Will Hild. Brent is responsible for managing the entire Texas Attorney General's office under Ken Paxton as the first assistant. He's got over 4,000 people underneath him and personally has negotiated multiple billion-dollar settlements with large companies, and I believe was in charge of this settlement as well, given Texas's leadership in this matter. So that means, in my opinion, Brent's one of the most influential attorneys in the country, and we're so honored that you would spend some time with us today for this discussion. Will Hild runs the nation's oldest consumer group, Consumers Research, which was founded almost 100 years ago in 1929. And of course, we all know what happened on Wall Street after Consumers Research was founded. So Will has kept up that pressure, probably becoming the most prominent voice, I think easily the most prominent voice over the past 5 years on ESG, and in fact has issued some pretty detailed reports about asset managers in particular that we'll be talking about today. So Will, I'd like to start with you, if that's okay. Can you give us some background? How do asset managers influence companies? Why would a state be looking at this area of the economy if they're concerned about these issues?
Yeah, absolutely. Let me take one quick step back and just explain why these asset managers, these top three in the country, got so big. Basically, you have giant pools of government capital from across the country. So you have tons and tons of state, local, and federal pension funds that have to be managed. And most of those managing involves putting them into broad index funds like the S&P 500 or the QQQ. And so that has led towards economies of scale. So you have firms the size of BlackRock, for example, that manage AUMs the size of $13, $14 trillion. State Street and Vanguard being 2 and 3 respectively behind that. And so in total, when you add those together, when they act in concert, you're talking about sometimes upwards of 25% of the shares of any given publicly traded company speaking with one voice. And in that case, it's not that hard to put pressure on a company. How do they do that specifically? Well, they've had a number of different ways over the last 10 to 15 years that they have gotten together to push a political agenda at these firms. The first is with what they call corporate engagement, and that's basically just a term of art for informal, off-the-record meetings with the leadership of these companies. So you'd have, for example, the head of stewardship, Sandra Boss at BlackRock, calling up or setting a meeting with the boards and C-suites and investor relations departments of companies like Exxon, BP, Chevron, all the big coal companies, all the big airlines, and basically stating what they would like to see out of these companies. And that could be things, you would hope that would be things like, increased earnings, decreased costs, the, bread and butter of returning value to shareholders. But over the last 10 to 15 years with the rise of ESG, what we've seen is them pushing a far left political agenda. So instead of calls about earnings, it's been calls about net zero ambitions, how long it's going to take them to get to net zero carbon emissions, calls about social agenda issues with DEI and the trans issue, that kind of thing. And so that's step one, is to articulate, communicate to these management teams what these firms want to see out of them. Step two, and this is sort of the stick, the enforcement arm of this, is that using their shares, they get to vote on a number of perfunctory votes that come up every year. One is voting to reelect or not reelect the board of directors of these companies. Two is getting to vote up or down on the compensation packages for the C-suite. And then a third that gets a lot more attention probably than it deserves, but is a major component, is voting for shareholder proposals that are often put on the ballot by even more farther left activists like the New York City Comptroller, for example, or a number of different far left activist groups like one called As You Sow. And so threatening to vote for those types of radical shareholder proposals if people won't play ball in the informal corporate engagement. And so those are the main ways that the asset manager is able to exert force. And then in addition, what this lawsuit alleges, and I think what Vanguard is basically saying there must be some truth to, because they paid out, as we're going to talk about, is that these asset managers were coordinating with each other so that they were all singing from the same song sheet.
Can you talk a little bit more about that? And I know some of these allegations are in the complaint, but talk about some of the allegations around coordination related to ESG through various groups and so forth.
Certainly. Well, if everything I just described wasn't bad enough in terms of large asset managers using other people's money to push a political objective, they join a number of, in my opinion, brazen antitrust schemes to further that collusively. So you had probably the largest was called Net Zero Asset Managers. It was a subsidiary of the Glasgow Financial Alliance for Net Zero, often referred to as GFANZ. And that was a consortium of the world's largest asset managers from across the globe who all agreed to pick the same targets when it came to net zero, but across basically every major industry in the world. And so they set targets, for example, for what net zero would look like for airlines, for concrete manufacturers, for steel manufacturers, for oil and gas producers, for coal producers in this specific case. And then they all agreed that when they would have those corporate engagements, when they would vote up or down on people's compensation and whether their boards were reelected, they would use whether they were hitting those targets as part of the metrics for how they make those voting determinations. And so it sent a message to corporate America that this was one of the objectives you needed to undertake if you were going to keep your job and keep your salary high. And so it had an immense amount of power. And even worse, they were communicating with each other. So I mentioned Net Zero Asset Managers. That was a specific organization for asset managers. You also had a few others worth mentioning, one called Ceres with a C. You had something called Climate Action 100, which you were talking about antitrust. What cracks me up, they've since deleted this, but at one point on their website, in the About page where they described what they did, they drew out a diagram where they would pick a lead investor, a lead owner of the business, to target the company to push net zero, and then the other members of Climate Action 100 were supposed to follow that person's lead. And the diagram that they drew of that lead investor following the lead literally could have been lifted out of an antitrust textbook for a hub and spoke antitrust conspiracy. So on Climate Action 100's webpage, they basically described themselves as an antitrust conspiracy. So there were a number of these different groups. I'm proud to say that once Attorney General Paxton's office launched this suit, a number of these defendants left most of those groups, some of them which collapsed. Net Zero Asset Managers, I think, just relaunched. We'll probably talk about that a little later on, but much, a lot more defanged than they currently were. But there were these sort of consortiums that basically were operating brazenly, that they were colluding in the market.
So Brent, you're in charge of the Attorney General's office in Texas, which is the oil producer for much of the United States, much of the world. How did these issues come to you? What led to your decision to file this lawsuit and invest your office's resources in this area?
Well, just to begin, I want to thank Attorney General Paxton for his leadership in this area. I came to work here in 2020, and right away he made it a point to let me know that it was a big priority for him to protect the energy industry. A lot of the energy industry is based in Texas, or oil or natural gas. We don't have as much coal as others have. It's not really a big part of the Texas economy, but in general, when these climate change terrorists target the energy industry, they're targeting oil, natural gas, and coal. And so we very much have a hyper intense focus on looking for bad actors that might be targeting those industries. And so early on, we were looking at the Net Zero Banking Alliance, Net Zero Asset Manager, and Climate Change 100. And we started meeting early on with other states. In 2021, 2022, we were having gatherings where we were talking about this problem and this intentional targeting, not only because it was bad for the energy industry and bad for Texas, but also because it's just bad for the economy. And so we started looking at these issues. We noticed that this was very anti-competitive, and it looked like these associations were going to be raising prices and causing price increases on normal citizens. And so we started looking at these issues and working up cases. We were looking at proxy advisors. We were looking at banking institutions. I heard a story yesterday about JP Morgan having a weekly meeting about Ken Paxton and his targeting of their gun policies and energy industry policies. So we were at the forefront of that. But we started also working with Cooper and Kirk and David Thompson. And with this particular case, they helped bring it together. We also brought on Tony Busby to look at this case before we filed.
And can you talk a little bit about how these actions harm consumers and what the liability theory is of the lawsuit?
Sure. So pulling back for a minute, and this Will touched on this a little bit. BlackRock, State Street, Vanguard, they had joined a number of ESG-related climate change groups where they committed and agreed to use their shareholdings for ESG-related goals. And they brazenly published this on their websites and on these in these association groups. And so we looked at that, and we looked at coal, and all of these individuals had basically joined together and bought a controlling interest, these three firms, in coal companies to the tune of 30 to 40% ownership, which 30 to 40% ownership made them the largest shareholders for these coal companies. And so they said, we're going to go out and we're going to try and reduce carbon emissions. So we need you companies to reduce the production of coal. And so, of course, the supply goes down. And what happens? The cost of coal then shoots up. And they score a big profit using climate change as their reason. But the people that bore the burden of that profit were these normal Americans who were just trying to heat their homes and provide energy for their homes during winters. And so that violates the Sherman Act. It violates the Clayton Act. And so we looked at that and we're like, we need to do something here. And then amazingly, you look at these managers, these asset managers, and their filings. When they filed, they told FTC and the DOJ that they would be passive investors and they would not use their ownership interest to influence corporate policy. And they did just that. So we decided we have a pretty good case here, and we had brought claims under Section 7 of the Clayton Act for the acquisition of those interests. And then we brought Section 1 claims under the Sherman Act for their cartel-like behavior with the different climate change groups.
Thank you. And just a note for the audience, I can see the questions that you ask in Q&A as we're going. So if we're talking about something that you want to ask about, please drop it in the chat and I'll try to incorporate it. And in fact, somebody just did that. So there's a question about you're suing the shareholders of the coal companies. And there's this interesting dynamic where the shareholders are asking for something. The asset managers, as stand-ins for the shareholders, are asking for something that's opposed by management. What was your thinking around potentially suing the coal companies themselves and saying, well, you were part of this thing? Obviously, here you're focusing on the shareholders, but what was your thinking around that?
Well, so first of all, our interest is that these companies should be able to operate in the most profitable way they can. These coal companies and still produce coal for America. And so the bad actor here were actually the asset managers who came in and said, hey, we're going to use our weight here to influence your decisions. And those decisions are going to be driven by climate change terrorists, not by normal traditional profitability. And so it seems to be we should focus on the bad actors here and not on the coal companies.
Could you just walk through some of the milestones in this litigation? Obviously, you just had a settlement, but this has been going on for I think over a year. So can you bring us all up to date on what's happened so far?
Yeah, so we filed our case in November of 2024. And this is coming on the heels of a lot of really great things happening in America. There were, I think, the beginning of banks leaving the Net Zero Banking Alliance. So there was a lot of momentum on this front. Um, Thankfully, the President Trump's DOJ and the FTC filed a statement of interest in support of our lawsuit, supporting our theories in this case, and came in behind us early on in the case. Um, the next thing that happened is, of course, the defendants, as they always do, they filed a motion to dismiss. We won that motion to dismiss and proceeded to discovery. And so we're currently in discovery. Vanguard showed a lot of interest in discussing the case with us to reach a resolution here. And so we were very open to conversation. And we're always open to conversation with companies that want to do the right thing and want to find a resolution that resolves the issues we brought to court.
And can you talk about some of the key terms of the settlement? What did you end up with? What was most important to you?
Well, most important to us is we want to make sure that these asset managers remain passive investors with these corporations. So we were excited to hear that Vanguard wanted to embrace that concept fully. And to be fair to them, they were very positive about the changes they were already trying to make. So dropping out of Climate Action 100, Net Zero Asset Managers Alliance, other groups, they're allowing their investors to have control over how the voting goes with proxy votes, which is a really big deal. That takes away from the duopoly that ISS and Glass Lewis has and allows these investors the right to vote in ways that they want to vote. They've also agreed that they will not advocate to any portfolio company that it take action or not take action with respect to carbon emissions, which is very important. And then I would say for the case, and setting aside money for a minute, they've agreed to cooperate with the case. And so in some ways, when you have, it's like an analogy here, this part of the settlement, it's kind of like when you have a conspiracy in criminal law and one of the persons in the conspiracy says, hey, we want to take the good deal and like cooperate against the other individuals. So they've agreed to take the good deal and cooperate against State Street and BlackRock. And so we're very excited about that. They've agreed to pay $29 million in civil penalties to all of the states collectively. So we were happy with the results. I will give credit to Vanguard. They were very proactive in wanting to do the right thing here.
So your litigation's ongoing then against BlackRock and State Street. What's the status there? Is it headed for summary judgment or?
We're in discovery. We're excited to get access to documents from Vanguard that we may not have had access to. We're going to go still hard after the evidence that BlackRock and State Street have. So we're going to aggressively litigate this. We have trial in 2028. It is pending litigation, so to go further into our strategy, I would hate to do that. But sure. We've developed a pattern at our office of having a litigation first mentality. We believe that deadlines and discovery are good. And we believe that pursuing the facts are important for not just a litigation result, but also for the citizens of Texas. When we say there's been wrongdoing, they deserve to know what that wrongdoing was. And so we're going to pursue it diligently.
So I know that some of the asset managers, and maybe I'll bring Will in on this one as well, said, well, this lawsuit means we can't own coal anymore, and we're going to have to divest. So maybe I'll start with Will and then Brent, come back to you. What do you think of that argument?
Yeah, you're seeing a narrative, or I should say, you're seeing attempts at a narrative, and I'll let the audience pontificate on who might be behind pushing that narrative monetarily. But you're starting to see certain groups push a narrative that this lawsuit is actually anti-coal, because one of the consequences could be that these companies have to divest from coal companies. First of all, that's not in this settlement. That my understanding, obviously I'm not party to the litigation, but I haven't seen any indication that that's what Texas has been pushing for. And you heard from Brent and his office, their idea is not to push companies out of investing in coal. It's to make sure that their investments are not used to undermine the production of the product for consumers. But putting even that aside for a second, it's sort of a ridiculous assertion to make, even if Texas pushed for that. It's totally misunderstands the roles that these asset managers play as capital allocators. So the reason, as I mentioned before at the beginning, that these companies have gotten so large is because they specialize in passively managed index funds. They, in many cases, don't even manage the lists that make up these index funds. For example, Standard & Poor is the one that handles, obviously, the Standard & Poor's 500, or the Dow Jones is who handles the Dow Jones Industrial Index, which are the major indexes that include these coal companies. If any case or any future ruling from a litigant or litigation or regulatory ruling was to force any of these or all of these players to divest from coal companies, that would not mean that actual capital was taken out of the production of coal. What would happen is they would basically have a lot of their products ruined, because instead of the S&P 500 BlackRock fund, it would be the S&P 495 fund or something like that. I don't know exactly how many coal companies are in this S&P 500, but you'd have to basically subtract that, and they would introduce tracking error into their product versus everyone else's fully S&P 500 fund. What people would do is simply just sell the new broken BlackRock index fund and move into some other broad market. You're not going to destroy the brand and the attraction of owning the S&P 500 index fund. And there's literally hundreds of alternatives to BlackRock, State Street, and Vanguard's index fund in that regard. So it's wrong on both counts. One, it asserts motivation or a consequence of this litigation that's not been asked for. But also, even if it was asked for, it misstates the consequences that would actually result if they were to get if someone was to ask for that, or a regulatory body like the FTC or FERC was to demand that, which, to be clear, they would be well within their rights to do based on just the fact patterns that we already have. So this isn't something that would even necessarily need to come from litigation. It could come from a regulatory body that's tired of these so-called passive managers lying about the role that they've played in the industry.
Yeah. And I'll just jump in, Paul. First of all, this is kind of a ridiculous assertion that's been made. We aren't trying to stop any investment in coal. In fact, we want investment in coal. That's the basis of our lawsuit. What we don't want is a bunch of passive investors not being passive, buying up controlling interests, and then killing the coal industry, and then also driving up the price for Americans when they're trying to heat their homes. So if they want to collude together to buy up a controlling interest and then force those corporations to do things that are going to kill those corporations over time or kill the coal industry over time, then yes, they should divest. But other than that, they should invest in it and let those companies operate freely and be the passive investors they should be. And one more thing, and I will say this as well. I think there's something, people that aren't in tune with how media works. And so I'll be on the nose about this, but BlackRock doesn't invest heavily in defending their litigation. They invest heavily in influencers and people that will write op-eds for them. And so when the former governor of Texas goes out and writes an op-ed saying things that don't make logical sense in the context of the lawsuit, you might ask the question, was he paid to do that? And how did this media narrative originate? So you have to be hyper vigilant in today's day and age when you hear arguments, and go back to the actual filing and say, well, does this filing say what he says it says? And if you do that here, it doesn't say that. And our litigation doesn't say that we're trying to stop investment in coal. What it says is stop trying to kill coal.
Well, and I think this settlement you just signed is a pretty compelling data point in your favor, as obviously the result was keep investing and stop engaging in activities that would reduce the production of coal. Can you talk about, and I'm sure the companies will always say, hey, this is basically our existing practice. We're not really changing anything. But there are some concrete changes here. And maybe I'll kick this over to Will. For one thing, Vanguard's dropping out of UNPRI, which is a very big deal. They may be one of the first to be dropping out of there. They have a specific commitment to no longer seek carbon emissions targets from companies, and maybe that's new, or maybe that's not a change. But previously they had signed a document saying that they were going to pursue those sorts of things as part of NISAM. Will, for the market at large, what do you think some of the most important terms of this settlement will be?
Oh man, that's such a hard question. There's sort of three main categories of what they're agreeing to here. One is obviously the monetary damages. Two is the cooperating with litigation against the other two parties, and specifically providing the communications that they had with BlackRock and State Street in colluding to push this agenda. And then third, as you noted, is to cease all the lobbying activities against these coal companies and their management that they were doing. And I have a hard time deciding which one I love the most. So I'll make a very quick case for all three. One, this is the first time that monetary damages have been applied to this kind of hijinks. Specifically, I'm not antitrust, but specifically around pushing a net zero agenda. And when I first got into pushing back against ESG, and I would highlight for journalists and media personalities, the issue here where you have owners of companies or partial owners of companies pushing for a reduction in the production of a good or service, that's a brazen antitrust conspiracy. They'd push back and go, if that was true, someone would sue over it. Well, I don't get that pushback anymore, thanks to Paxson and Brent's efforts. So that's number one, is it puts an end to this myth that this didn't really matter or this didn't count as an antitrust collusion conspiracy. Two is, of course, them ceasing their individual activities, but also leaving a lot of these groups. And because Vanguard is the second largest asset manager in the world, when you look at the AUM controlled by these organizations, when Vanguard leaves, that's a big hit to the power and prestige of these groups. And as you noted, taking a hit at UNPRI, which was kind of considered the softest one of the group. So for them to start losing members really suggests that the winds are going in the opposite direction. But then third, and I think actually the most important, is Vanguard agreeing to hand over communications that they've had with these other parties. Because I think it's going to put an end to the myth that there wasn't collusion going on, that there wasn't coordination going on between these parties. Again, for a long time, the defense of these asset managers has been to claim this is some sort of crazy conspiracy theory, take off your tinfoil hat. The world doesn't really work that way. You're too cynical, you're naive, or you're so cynical, you're naive. And I think we're about to find out that is the opposite of the case, and that they were hiding in plain view their activities. And I can't wait to see what that discovery is going to divulge. And again, kudos to AG Paxton's office and Brent in particular for having that, I think, rightly righteous priority of not just, hey, we're undoing the harm or we're stopping the harm, but the citizens of Texas and the citizens of the United States should know what went on behind closed doors that was against their interests.
Makes sense. The UNPR point was really interesting to me because it looks like a lot of this coordination may be moving over toward the UN. We saw that to some extent with net zero financial services providers. Brent, if I can, I'd just like to read a couple lines from the new commitment that members of the Net Zero Asset Managers Initiative sign. And as Will noted, this is an initiative that lost all its members around the time you were filing lawsuits and has now come back. So they have a commitment with a whole bunch of qualifications based on our legal duties and duties to clients and so forth and surrounding circumstances. But they say we will set near-term climate targets consistent with the global goal of net zero greenhouse gas emissions. And then one of the other commitments is to engage with key actors in the investment system, data and index providers, ratings agencies, investment consultants, to encourage products and services that reflect climate-related risks and opportunities. How do you look at commitments like this? Do you have any message to companies that are thinking about signing these sorts of commitments with their competitors on how they plan to impact the market?
Well, look, not knowing how they're going to implement these commitments presents a little bit of a problem in terms of predicting how we might respond to that. So I can't commit to how we might respond to how they implement and how they sign off on these things. For example, maybe they have a standalone product they want to sell that says this is just an ESG investment, and all it is, you're just investing for ESG purposes, and we're going to be crystal clear on what we're doing. Maybe that flies. But I would say there's a lot of people that questioned our ability to get past a motion to dismiss in this case. You look at a lot of the articles that were written about our Section 7 Clayton Act theory, which has largely been untested until now. And they thought they were going to win the motion to dismiss, this was going to get killed. And so there's almost a new world now where I think these asset managers and other financial actors have to assess how their actions might, if they collude together in these agreements, might affect the market, might affect their investments, might affect the economy, and how these antitrust laws may be used to stop that. And it's always interesting because I find it almost misleading to their investors, because they say we're doing this to reduce coal emissions. We're just trying to reduce emissions. But there's always a hidden goal, and that's just to make a lot of money off of these political movements. And so, I wouldn't put it past people to sign these and to find a way to use them in some financially beneficial way. And so we'll have to just assess it then. But I would say it's very dangerous now after this case. And I do think that you'll see Texas and other states and even the federal government looking at ways to continue to enforce antitrust laws when these agreements get signed. It's being closely examined, and it's going to be broadened from that as well. You're going to look at, ISS and Glass Lewis. I mean, these guys are under investigation by our office right now, and so I think that the whole industry should take a look at how they're operating right now, and that's the only way they can really head off future litigation risk here.
You mentioned the proxy advisors that are under investigation. And of course, this lawsuit was just focused on coal. But if you look at roadmaps on how to get to net zero, with airlines, it's using different types of fuel and dramatically reducing flights. With energy, it's reducing the production of natural gas. With agriculture, it's reducing the consumption of red meat. Are there other sectors of the economy that you've looked at or might look at to see how commitments around ESG might be affecting products?
Yeah, I think we're looking at any place where these acquisitions or how they're voting is substantially lessening competition in these industries. I mentioned ISS and Glass Lewis because we've at least preliminarily discovered that a lot of their advising isn't necessarily accurate, and I'd say accurate in the sense that there is a climate change approach to how they're advising, and that's misrepresenting a lot of things. And so also they're a duopoly, and how has that impacted the market? So we're looking at ISS and Glass Lewis. We're also looking at, and this is kind of obscure, maybe for this podcast, it may sound like an obscure thing, but plastics and a lot of the shenanigans that are going on in plastics right now. And I don't want to dive deeper into that right now because we're just beginning that part of our investigation, but we're always looking for opportunities to make sure that that people aren't violating antitrust laws, consumer laws, and that they're operating above board.
Will, we're getting some questions about some of the environmental activists that kind of market themselves as activists and the influence that they've had and the coordinating role that they play. So somebody like As You Sow that files a lot of shareholder resolutions. Can you talk about a little bit about how they operate and how they fit into this ecosystem?
Yeah, absolutely. So As You Sow is a sort of a woke activist group specifically centered around net zero. they've been one of the biggest proposers of radical left shareholder proposals to companies. And the way I describe it is sort of power petitioning itself. So very rarely, I don't know of any specific case, do the asset managers themselves put forward a shareholder proposal in the direction of net zero or whatever other left-wing policy change they want to see. But they will let some radical organization, or they wait till some radical organization pushes it, and then they will use that as sort of a carrot and a stick approach, how they're going to vote on those things to sort of cajole these companies to get on board. And often the activists are part of the same membership-based organizations that the asset managers are. So it's kind of laughable to think that they're not coordinating at some level these activities. So for example, New York City Comptroller Brad Lander has been one of the most prolific shareholder proposals, of course, not using his own shares, but using the shares of the beneficiaries of New York City, to put, left-wing shareholder proposals on the ballots. Well, New York pension funds are also members of a lot of these consortiums like Ceres and Climate Action 100 and whatnot that are coordinating with these asset managers. So they basically let people like Brad Lander, as you sow, take the lead, sound the craziest, but then they come along and, when they're in these corporate engagement meetings with, with Exxon or whatever, they say, yeah, we're deciding on how we're going to vote on this. We'd like, we don't really want to do that, but, you are kind of behind on your net zero plan. Like could you make a stronger commitment? Could you make more changes to your capital expenditures next year, your investments, that kind of thing to get more in line? So it allows them to have an even crazier wing to point to and go, well, we're not those guys, but unless you want to deal with them, you have to deal with us. And so I think breaking down those abilities for those folks to coordinate is going to be huge. I mean, in fact, the sort of high watermark for all of this activity was a situation where several BlackRock executives left the company, went to go run an activist hedge fund called Engine Number One. Engine Number One, I think, owned like 0.02% of the shares of Exxon, but sufficient enough that they were able to put a slate of board of director candidates on that ballot that year. I think it was 22 or 21. But in any case, BlackRock then, kind of surprising everyone with how fervent they moved, voted for a number of those candidates and put 3 radical net zero ideologues on the board of Exxon. And at the time, if you looked at the internal, or I should say external communications that As You Sow was putting out after that win, this sort of, the megalomania was sort of in the air. They felt like they were on the cusp of completely running all of corporate America. Now, thankfully, that ended up being the sort of most powerful the ESG movement ever was. But that speaks a little bit to the ways in which those would work hand in glove.
Brent, you mentioned the distinction that you make in your mind between products that are marketed as ESG for consumers that specifically want that investment product versus a product that's marketed as a financially focused general product and sold to consumers who may have no idea that there's all this net zero engagement and voting. It looks like there's also a distinction between entities within the United States and entities outside the United States that might be dealing with a different legal framework or different clients. And in the Vanguard settlement, there are specific terms applying to U.S. entities, it looks like, and maybe not a European subsidiary or something. Can you talk about that aspect of the settlement and how you think about those complexities that a global institution faces?
Well, Paul, that's a great question. That's very hard to navigate. To step back from that question, we first have to navigate, when we bring litigation like this, competing individual state interests in the United States. Traditionally, you had a lot of pushing by the liberal states in the United States towards ESG initiatives. And so a lot of these corporations tried to comply with that. You see that a lot with California. What Texas has tried to do is to try to provide a counterbalance to that. And so you'll see our policies want to focus more on, hey, what's the fiduciary goal of these companies? Let's focus on that. Let's protect the energy industry to help balance out the push to kill the energy industry by California politicians. So that's our, I would say, the first problem we have when we go to talk to these corporations is they have competing push and pull occurring here in the United States. When you then apply that principle to the world, and these companies do have a little bit of a problem in that they're trying to implement policies worldwide and comply with different regulatory frameworks. You're seeing right now a hard push in Europe to counterbalance the United States with their regulatory frameworks. And so that's not a problem Texas is going to be able to solve. I wish we had that kind of power. We were once a great country. We're a proud state now. But the United States as a whole is going to have to do something to address these issues with the push-pull that occurs with Europe and also with China, who is not looking to really reduce any coal or really do anything to influence the environment. And so I think that I don't have answers for you on that front, but I do think we need some type of proactive initiative at the federal level to help balance that.
Right. I remember being in London and someone showing me a placard where Texas had its embassy for a short period when it was
When I lived in London,
independent.
when I lived in London, that was actually a Mexican food restaurant. It was the only
Oh, no
one
kidding.
that I knew
No
of in
kidding.
London. So
So obviously there were a lot of other members of Climate Action 100. There were a lot of other members of net zero asset managers, not as large as these three that you selected. But now you've had a lot of success here. Not to reveal anything, but is there any thought about, hey, there's maybe another 10 or 20 players that combined had a pretty significant impact on this as well? Have you thought about that scenario?
yeah, I can't betray any internal workings here because we're obviously always looking at new cases. And as you guys know, my boss, Ken Paxton's probably going to be the next senator from Texas. And so my time here as the chief deputy will be coming to an end, and I'm trying to bring as many beneficial cases on behalf of the state of Texas as possible before I leave. It's one of my missions. And so we'll see what happens over the next few months. I will say we got a great new hire. Tom York is our new chief of antitrust, and he's brought a lot of new cases. And we are looking heavily at this ESG front there. We did recently bring our own case against a company called Epic. I know that's not the topic of today, but it is a good antitrust case to take a look at in the medical record front. But we are going to continue to look at these bad actors and see if we can make a lasting change for Texas.
I would just say on that note, obviously, I'm not in the business of making policy decisions at any state level, but I think that this case, another important aspect of this case, there was a movement on the left, still I probably exists to some extent, to either de facto or de jure exclude any kind of consortium supposedly for the benefit of the environment or society from antitrust law. In other words, there was going to be a halo exception to colluding in the marketplace against the consumer, at least from the perspective of the left. So there were even been some efforts to codify that during the Biden administration. Luckily, they didn't go anywhere. I'm hopeful that this case, and I believe it is, going to finally put that to bed. There is no exception, and you mentioned the plastics case. I don't actually think it's that far afield, Brent, from the topic of today, because it's another example where left-wing policy is trying to be implemented through an antitrust conspiracy, and they get indignant when you go, I don't really think you're allowed to start colluding against the consumer like that, regardless of what your own internal motivations might be, whether they're pecuniary or righteous. And I think setting a firm line and saying there's no good guy, and to be clear, I'm not calling the asset managers good guys. I mean, from their own perspective when they look in the mirror. There's no, I think I'm a good guy exception to antitrust. And I think that was developing on the left, at least that perception was developing on the left. And so I think bringing those cases, not just against the asset managers, but kudos for bringing action against this plastics thing too, because I think you're putting a stop to that. And I think that's very good for consumers because it's just too, it's flagrantly being used against their interest to raise costs.
Will, I'll ask you a question from the audience. We have a question about the CEO of Saudi Aramco is now on BlackRock's board of directors. And instinctively, you would think, well, this guy likes oil production, so we'll probably get a lot more of that. Can you talk a little bit about foreign countries with large presence in the energy market and the impact that they have on the production of energy by American companies?
Yeah, that's a great question, and I think it was a twofer for BlackRock because on one hand they helped it helped them dispel the, I think, true and right perception that they had done a lot of damage to the fossil fuel industry in the United States by cozying up to Saudi Aramco around that. But that's actually par for the course in this entire story. That's not a pro fossil fuel move. That's a pro foreign fossil fuel producer move. We've seen that. In fact, it helped develop this entire antitrust conspiracy. Let me give you a couple examples. One, not a group that a lot of people hear about a lot, but the Norwegian Sovereign Wealth Fund is actually one of the largest in the world. I think it has over $1 trillion. And they had actually stated about a decade ago that they would only use asset managers who would use their entire AUM, their entire portfolio, to push a net zero agenda. Well, that's kind of a weird thing to do. Why is that? Well, Norway is probably the most oil and fossil fuel dependent economy in the entire world. 60% of their exports are petroleum or petroleum products. So where do they get off, pushing this net zero thing? Well, it makes a lot of sense, actually. I'm not saying that the people who run the sovereign wealth fund aren't net zero zealots, but from the country's perspective itself, from their economic perspective, it makes a ton of sense to take the profits that you make drilling for oil and use them to undermine the production of all your global competitors. Oil is a global market. So if you get production to decrease in the United States, you have increased the demand for your product in Norway. Another example of this was Japan's sovereign wealth fund, which did basically the same thing. Now they're weirdly the other side of the same coin. They don't have oil. And so it actually behooves them to hamstring other geopolitical competitors on the economic level to lower our production, makes us less competitive of a manufacturing environment, production environment vis-a-vis Japan, which has to rely on more non-fossil fuel, or they have to import their fossil fuels or use non-fossil fuel electrical sources like nuclear. So there has actually been a sort of geopolitical element to this of people pushing the United States and its producers to lower production of fossil fuels, and for various reasons that sort of behoove the interests of those entities. And so I think what explains BlackRock cozying up to Saudi Aramco and putting someone from there on their board is it actually is just them again partnering with foreigners against United States fossil fuel production. It's actually just more of the same, but they're playing it as sort of a change and shift of their strategy.
Brett, we have a question for you here about changes that you've seen during the course of your tenure now that you've handled negotiation and litigation against some of the largest companies in the world. Has there been a change in how companies are approaching state AG's offices or your office in particular, given how litigation focused you have been? And are you seeing this when you file lawsuits and start getting into negotiations?
That's a great question. I'm seeing a trend line right now. I think that, before I got to this office, there was very much this multi-state negotiation mentality where nobody really filed any cases. We just threatened corporations. And then for 10 years, there would be this industry around negotiating, sending out civil investigative demands. And I'll give kudos to you, Paul. At the Arizona AG's office, you guys really pioneered this litigation first mentality because you guys brought cases. But a lot of the corporations just got used to this model. And so it just endlessly paid outside law firms to negotiate with these states for 10 years or more. We had a hotel case that lasted, I think, 9.5 years. So I came in and I was shocked at that. I came from a prosecution background. And, in the prosecution background, you get the case, you decide if it's a good case. If it's a good case, you bring the case. If it's a bad case, you don't bring the case. And so I just said, look, let's look at these cases and see, do we have a bad actor? Do we have a violation of the law? And do we have some evidence to bring the case? And if we do, let's not mess around with this never-ending negotiation that costs everybody a lot of money and a lot of time. Let's just get in court, have some real deadlines, do some real discovery, and see what's happening here. and it's been very effective. At first, a lot of the corporations treated us like a plaintiff's outfit. So they didn't really want to negotiate. And they're like, well, if we settle with you, then other plaintiffs will follow. They weren't treating us like a state. And so I think we've corrected that. We expect to be treated like you might treat the DOJ. And when we bring cases against you, we're serious. We have some allegations that we're going to bring, and we have evidence. And so over time, I think more and more corporations are willing to negotiate with us earlier to stop the bad acts and commit to a different course of action as a result of that case. And so every time this happens, Vanguard was a very early settlement. I don't think that would have happened 4 years ago, but because we've shown this behavior and we've expressed an opportunity to resolve issues early in this litigation, we're seeing more and more corporations come to us saying, hey, you sued us, but let's see if we can work this out. If you don't sue them, they're not really interested in working it out with you. You're just going to end up in never-ending conversations.
Right. Now, an opposing argument that you might hear is along the lines of one of the questions we have is, well, if red states start suing, then blue states will sue as well. And so you're reducing the distinction between red and blue states and maybe leading to more litigation. We have a question here about a Michigan antitrust lawsuit against oil companies. And I don't know if you've been following that lawsuit. Is that something you've followed? The theory is a little bit different theory. The theory is essentially oil companies colluded to suppress the introduction of clean energy into the economy, and this had anti-competitive effects. But if you're not following that, I'll ask about a different aspect of that.
No, I don't mind. I'm not following the case. It sounds like a loser based off what you described. I will say just an operative theory there. Blue states aren't going to stop suing because the red states aren't suing. That is a false premise. That trade doesn't work, right? And so we can, and this is something we have to realize, like you got to think about it in terms of war. And everything now has become warfare within the courtroom. And so we can sit over here and not enforce things, but we're just going to get run over then by the blue states.
And that, I guess, goes back to your point about the EU. If all the pressure comes from the EU and there's no corresponding pushback, then all that means is the EU gets to manage the American economy.
Yes.
So we're seeing this is another question we have. We're seeing a shift away from joining some of these organizations and more toward companies saying we're going to withdraw, but we're going to keep doing the same thing, or we're going to withdraw and now we're going to base our operations on maybe not a group, but some external standard. Will, can you talk about, I'll ask Will about that phenomena generally, and then Brent, I'll ask you about how that might factor into an antitrust analysis from your perspective.
Yeah, to some extent, this is nothing new. I mean, when you look at the standards that NZAM, Net Zero Asset Managers, or even all the other partner groups like Net Zero Bankers Alliance, Net Zero Insurers Alliance, which I should note, AG Paxton's office, along with some other AGs, also blew up, the other two. They always pointed to outside standards, supposedly, that were objective and science-based. They used that to deflect from what they were actually doing, which is trying to set environmental policy across all of corporate America without going through the electoral process. So it was a way in which they were pretending where they weren't in the driver's seat. They specifically used, I think, the pathways to net zero from IEA, which is an energy analysis organization that supposedly, I don't think they're very scientific, but pretended to be, or had the pretense of being a scientific pathway to net zero. And then they would adopt those standards. I'll let Brent, a much better lawyer than I am, talk about whether that would be much of a defense in the courtroom. But it seems pretty obvious to me that whether I decide that the price of milk is going to be $4 a gallon, or I let someone else develop a standard that it's going to be $4 a gallon, and then I adopt that standard. If I collude with other business owners to set the price of milk, I'm going to be finding myself in a lot of trouble. So it doesn't seem to me to make that much of a difference. It's just from an optics standpoint, it's a way where they try to obfuscate that they are driving an agenda through collusion in the United States.
Yeah, I mean, it's like the problem of money laundering, right? There's a lot of ways to launder money. There's a lot of ways to collude. And so enforcement agencies are going to have to do the work of showing how they're colluding, right? But the vehicle that you collude, there's no like magic way to avoid the collusion if you're colluding. And so that's just, I mean, you have, I think there's litigation against RealPage in the United States for, the rental market and apartments, and they colluded with a third party, how that operated. There's always creative ways to do these things. And so it's just going to be a matter of the enforcement agency willing to do the discovery and the research to prove that that collusion's happening. And by the way, that takes work. And this is the thing, a lot of people, they come in and they don't want to do the work here. And so it's easy to say, well, there's something's happening over here, but you have to have some team go through and show, let's connect the dots of how they colluded on these issues.
Brent, we have a question about litigation. I know you mentioned that ISS and Glass Lewis are under investigation, and those entities have also sued the state of Texas over a statute that was passed that would regulate their activities and require certain disclosures. Can you give a brief update on that litigation and any thoughts that you want to add?
It's pending. I will say, just broadly speaking, that the state of Texas has been very proactive in passing laws, and our legislature has been great in fighting back against these ESG initiatives. Our governor and our legislature have been phenomenal in that sense. That is pending right now. I don't want to comment too much on it or what our strategy will be, but we'll continue to fight for those laws, and we think we'll be successful in the end.
And Texas has obviously set up a whole framework around attracting companies into Delaware. Do you think about that policy goal as you're looking at these cases, and how do you interact with the legislature on these big topics of addressing something like corporate governance?
Yeah, we're always communicating with the legislature, especially when during the session, we only meet every 2 years. We're very proactive in educating the legislators about our litigation, and also why we're doing our litigation and how that's protecting the free market here in Texas. Because the big initiative here is we want to be a state where businesses want to operate, and they don't have to worry about other businesses interfering with their business. They don't have to worry about regulators interfering with their business. There should just be a focus on making money and having a nice economy and enjoying their life here in Texas. And so we've done that with these new policies, with our great Supreme Court here, who is very free market based, but also follows the law. They're predictable. And then we now have business courts too, where you can save a lot of time and energy and money by going to business courts and judges that are focused on these business disputes, not just random judges around the state.
So I think we have about 60 seconds apiece. Will, any concluding thoughts that you would like to leave us with? And thank you both very much for your participation.
Yeah, I'll go first so Brent can have the last word. I would just say that while this is an incredible achievement, and I think is going to send shockwaves through the entire ESG complex, we don't have the luxury of resting on our laurels, those of us who would like to see us return to a business-focused environment in corporate America. I don't think this is the same as when there's some sort of rule change at the SEC on some archaic regulatory matter, and everyone just goes, okay, that's what the new rule is, we're all just going to jump in line. As you noted, INSAM is already relaunched after a year of ceasing operations. For a lot of these people, this is some mix of grift and religious zealotry, often a mix of the two. And that takes a lot longer to dismantle than just making a rule change or clarifying a rule. So kudos to Attorney General Paxton's office and Brent's work and the other states that have joined. And I think, unfortunately, it's going to be necessary to continue this pushback, and we may need to see a lot of these cases spring up before people finally understand that they have to follow the law regardless of what their intentions are.
Brent, you want to close us out?
Yeah, thanks, Paul. Thank you for this time. Will, thank you as well. I just want to say there's a lot of unsung heroes behind the scenes that have supported us and fought hard on these issues, and I thank them. I think that, the one message I'll leave is that, we have a lot of lawyers. If you represent corporations that are doing bad acts, there's nothing wrong with trying to resolve that issue today. And so, Texas has a lot of people they have identified bad acts with that they're going to be looking at suing over the next few months. There's nothing wrong with approaching us and saying, hey, can we resolve this issue now? And so I would encourage that while I do come off today as aggressive and we are hard hitting and we are ready to litigate. We're also happy to resolve these issues in a way that resolves Texans' concerns, but also is a win for your company.
Thank you both so much. Thank you all for joining us this evening. It's been a real privilege for me to be part of this conversation and to benefit from the expertise of our panelists. I hope everyone has a wonderful afternoon. Thank you.